Mike Tedeschi, Wealth Management Advisor at Perspective Wealth Planning with this week's market breakdown video. We're going to take an in-depth look at the four major U.S. indexes. We've seen some divergences play out between a couple of the indexes here over the last week or so. The Nasdaq's been much stronger than the rest of the indexes. However, very few names inside the Nasdaq themselves are making those new 52-week highs. In fact, only 35% of them are. We're going to take a look at what that could mean for the numbers here in the short term and in the long term. We'll also take a look at our commodities in the U.S. dollar as well. So let's jump right into it here. S&P 500 continued to make new all-time highs. Today we're finally getting a little bit of a reversal here with a large gap down about 1.5%. Though from the open we have seen the market bounce back a bit. And if we look just really at where we broke out from back in the end of June, it was right here at this 42.50 level. We're not below that, so all this really could be is just a breakout, kind of back test of that zone before we continue to head higher. There's not a whole lot of reason to be super concerned with 1 day's worth of action here. However, if this starts to continue or we see weakness play out over the next couple of weeks, that, of course, then could change these charts and we might be a little bit concerned. But as it is right now, that's not the case. We have not made a new high on the Dow since May. So a very different chart than the S&P 500. You can see there we ran right up into that resistance zone. And we've rolled back over, but we haven't made a lower low at this point in time. Really, it just looks like the Dow's kind of trapped in between 33,000 and 35,000. Until we get a resolution one direction or the other, there's not really a whole lot to go over there. Now, when we look at the Russell, a very ugly action here over the last week and a half, okay? We have not put in a new high since March. We had pushed up into that resistance zone. We talked about it here over the last couple of weeks. If we were to make a breakout, it would be a very good signal. We are in a risk-on environment. It would probably bode well for the overall market. However, if we're not able to make that push, we're still trapped inside this range. We're not seeing performance out of the mid and small caps, a riskier area of the overall market. That, of course, could be a little bit of cause for concern. Now, the weakness we've seen over the last four sessions takes out the lows from June. So in the short term right here, we actually do have lower lows over the last month and a half. But really, again, the big picture is just this range on the Russell. We've basically been trading between that 2050 and that 2350 for the entire year. All right. So we're really looking for a resolution there. If we fall back down to that 2100 zone, that might be another good entry point that's worked here this year on the Russell. Below that 2050, it completely changes the way that I think about this market. Now, in on the Nasdaq here, you can see, look, we keep grinding higher. We basically put in a new high basically every day here over the last month. A very different chart than the Russell, a very different chart than the Dow, right? We had a period of weakness there when we had some outperformance from the Dow. That has switched back here over the last month or so as money flows back into tech, flows back into the growth area of the market. We do have a gap down here this morning, but again, when we're looking at this picture, our last really important lows like 13,400, and really the important is right there at that 13,000 level. We're still clearly above the 14,000 breakout zone. So I mean, even a pullback down here like this would be normal price action, right? Okay, we start undercutting this zone and we start really falling kind of below the 13,800. Now that's going to change the way I look at this market. But for right now, we're clearly above. We're up there, those all-time highs. The problem with the Nasdaq is there is not as much participation as you would think based on looking at the chart of the Nasdaq. Let me show you what I mean. We look at this, the Nasdaq, after it makes a new 52-week high with less than 35% of advancing issues, right? Meaning 65% of the names are not performing the way that this index is. Remember, this is an index that's very top-heavy and a couple of very, very large names that have done really, really well. We're seeing those monster, large cap stocks in the tech arena do very well over the last month, and that has really helped propel the Nasdaq higher. But we don't get performance and participation across the board. We have a breadth issue. And usually what this means, and you can see from this data set, we run into some difficulty 1 and 2 months later where we're only positive about 30-ish% of the time. Now, mind you, there's not that many signals that we take a look at here, so it is a smaller data set, but it does give a telling story. Now, when we go 6 months to a year out, we are predominantly positive. We're missing the data set from last year because we haven't made it a year since the last two signals in July and August of last year. So we look at 6 months out because we have that data for all of those. There was only one major pullback that was in 2015. The rest of the time, the market was higher. So what this is saying to me when I look at this is underneath the surface, we're not getting broad participation. Usually that leads to some short-term weakness. But since we do have the leaders leading, right, we're usually able to recover and end up in a better spot 6 months, a year later. So this is certainly worth looking at. It's the first time really over the last, couple of videos that we've made where we've really seen this major split between the indexes. And it's really because the Russell really has fallen off over the last 4 or 5 sessions, and the Nasdaq continues to just ramp higher, obviously minus today's gap down. But there's a lot to pay attention here. And again, everything on a technical basis, we're up near those highs. We're looking pretty good. But there, again, starting to be some cracks underneath the surface that we have to continue to pay attention to. We look in at the U.S. dollar. We touch base on this every single week. I think it's really important to do so. We have not taken and made a higher high from March, so we are still in a downtrend here in the short term, a series of lower highs. The thing is we basically have a flat bottom down in here. So this could certainly be a bottoming pattern that we're seeing, but we need to take this high out a little bit over 93. We haven't done it yet. If that happens, that changes a lot of things for me. Hasn't happened yet. We'll keep monitoring it. We take a look in at gold. Gold is back up over that 1800 level. Look, we pulled right back into that major zone of support that we talked about. It held, and now we bounced for 3 or 4 sessions. This chart's still a mess. It hasn't really accomplished anything in a year. After such an incredible run, the long-term chart still looks really good, but over the last year, gold really has not done what you would have expected it to based on the action that we saw the previous year. This chart is still completely fine as long as we really hold that 1675 level. If we lose that, I think the idea that this is a longer term kind of, little bit of a pullback and then, before the next move higher kind of goes out the window. But as it is right now, it's still fine. We look in at silver. I'm going to back this chart up as well. 26, very important level. We're holding on the upper side of it. You can see over the last year we have made a series of higher lows. Like silver's chart looks a lot better than gold's chart does. That bodes well for the precious metal space because, again, silver is a riskier metal than gold, and so when that is outperforming gold, that typically tends to bode well for the space. All right, we look in at Palladium. Palladium is back over that 2800 level. Look, we had that really sharp drop right to 2500. I said that was the zone. If it was going to make a bounce, we'd want to see it happen right here, and it was a quick move higher there off that 25 level. Watching that back up at 3,000, this has been the leader in the precious metal space for quite some time, having to do with the supply and demand issue and the use of palladium inside of catalytic converters. Sister metal platinum has not bowed as well. It is still holding above that 1,000 zone, but you can see that bounce was not very strong, right? They all kind of pulled back at the same point in time, and platinum did not rocket higher. Platinum is that $1,000 zone. Underneath $1,000, I do not like platinum. Above the 1,000, that is a major long-term support level. This chart's still fine. Again, it could just be kind of like gold, where we're just trading sideways a little bit down here over the last year, as we're really, basing potentially for that next move higher. Last metal that we want to take a look at here is copper. Copper's back below that breakout at 450. I'm going to zoom in now on a daily chart so you can see this a little bit clearer. I really do not want to see that 410 zone fail. All right, that would not be good. That would almost look like a false breakout to new all-time highs and starting to turn in the opposite direction. The other thing that you guys can see here, these don't matter until they actually play out, but there is a potential head and shoulders pattern setting up here and on copper. The neckline would be down here. Anything underneath $4 I do not think looks good on this chart given the price action on it, but it is still holding above that level. So as you can see where we're at, 4 major indexes. We saw a little bit of weakness here Thursday morning with some overnight selling, right? None of the major indexes broke any sort of key supports. Our metals are holding up just fine. The dollar has not made its breakout. So we are really just paying very close attention to what is going on here. The last thing that I will want to take a look at for you guys is the Nasdaq McClellan Summation Index, just to show you where we're at there. We can see a little bit of breadth deteriorating here, and it's doing it again at this really, really important 2 to 300 level. This is 2 years worth of breadth readings here, and that has been a zone where we get above. We've made some really, really nice moves, and when we failed at it, we've had some falls from grace. Okay, that's right where we kind of failed there in 2020. Again, like, we really need to, if you're to really be concerned about it, fall back underneath of that negative 300. So really 300 to 300 has been the key here on it. But if this goes all the way back down here, we are probably in for a couple of weeks worth of some ugly action out of the major indexes before we might, essentially turn back up. But like we showed on the actual index charts themselves, all right, we're all just kind of at key levels. Nothing is broken down. There's some reasons underneath the surface to be a little bit concerned. Those certainly could expand here in the short term, but as it sits right now, they have not, and so we're just watching closely. As always, I hope you guys have yourself a fantastic week, and this information was helpful. If you have any questions, feel free to reach out to me at Tedeschi at perspectivewealthclaiming.com or give me a call at 814-580-9881. I will see you guys next week. Take care.